Well, the election's over, the Labor Party's back into power. What does that mean for our housing markets, for property, for interest rates? What does it mean for you? That's one of the topics Dr. Andrew Wilson and I discuss in this week's Property Insider Chat. We also discuss what's happening to inflation and what that will mean for interest rates, as well as what's happening to our rental markets and auction markets around Australia. If you want to keep up to date with our housing markets and the economy, please subscribe to this YouTube channel and click the little bell icon so we can keep you updated each time a new show comes out. Well, it's certainly been a big week in property, with the Labor Party securing another term in government following the federal election. And now there's plenty of speculation about what that may mean for our economy, interest rates, and of course, the property markets. So today, before we dive into the latest data and trends, I want to unpack what this election could mean for property investors, home buyers, and renters across the country, and what the likely implications could be for inflation, interest rates, and affordability. And of course, to help make sense of it all, I'm joined by Australia's leading housing economist, Dr. Andrew Wilson, chief economist of My Housing Market. Hi, Andrew.
Yeah, g'day, Michael. And yes, it's been a busy, not just a busy week, but a busy month. Now we're into May. So with the exception of Queensland, of course, we've got all our public holidays behind us. So, and it has been quite a month of public holidays and diversions, if we count election night as one of those. And so perhaps we can get back to a bit more of a normal environment in terms of housing market activity before we move through into the quieter winter months. But I'm not so sure we're going to see much difference in our markets according to the political climate going forward. And I was shaking my head in relation to some of those policies that were promoted by both parties in terms of housing market activity. They still haven't fixed supply. They won't fix supply. They're just making people happier by giving a smaller proportion of people the opportunity to purchase what will be higher, to purchase homes, but what will be at significantly, well, certainly higher prices, I would suggest.
Well, if you give first home buyers the ability to buy $1 million home with a $50,000 deposit plus stamp duty, of course, you've got to have income, you've got to have serviceability. I can see that putting a fire under the lower end of the market. Having said that, they've also raised the bar for what first home buyers can buy, and it varies from state to state. But as you correctly say, there's no answer to the supply situation, and no one's actually even held them to account at that unrealistic idea of building 1.2 million homes. We're not getting anywhere near that, are we, Andrew?
No, it was just a silly promise or a silly speculative thought bubble, and nobody seems to have questioned them because they're miles behind that target. Of course, the federal government can do nothing about supply. It's a state and local government responsibility, but they can make silly promises. And unfortunately, the electorate don't seem to have the capacity or the insight to hold them accountable for that. But it'll only mean higher prices and higher rents going forward, but we should be used to that. And we're not alone, of course. Most Western countries are suffering these same problems, but a number of other jurisdictions have been held accountable in the ballot box, but our government wasn't.
We're going to hone into the rental markets in a moment, inflation and what that means, and clearly would be implications for interest rates for that, and a few other ideas about the housing market. But are there any other thoughts you've got before we dig into the data about what the election could mean moving forward?
Well, we're in the hands of the international environment in terms of the big picture, Michael. Interest rates, the government's already had its gift in terms of interest rates, courtesy of the Reserve Bank in February, which quite remarkably decided to cut rates in one of the strongest economic environments that we've ever experienced. But good luck to the Labor Party for that benefit. And of course, they also provided those lower electricity prices a year ago, or going on to a year ago, with the electricity handout, and that had a significant impact on inflation. But of course, it won't continue. It was a one-off, but it's achieved the result that the Labor Party were looking for, and that was lower inflation, which has activated the Reserve Bank despite how strong our economy is. The question is, will they cut rates again in a week's time, Michael? Well, the drums seem to be beating very loudly that they will, but it's the horse has bolted in terms of the influence on, I guess, the election campaign, people would have been feeling better with lower interest rates. And we're already seeing, as we discussed last week, Michael, the predictable impact of lower interest rates on the housing market. And we're seeing higher prices coming through again, and that will continue. And of course, in spades, if we get another interest rate cut, which seems pretty likely in a week's time.
Before we get into what's happening in the housing market, let's continue with the thought about inflation and interest rates, because last week the March quarter headline inflation came in steady at 2.4% compared to December. And these are the quarterly figures that the Reserve Bank's more interested in than the, I guess, more up-to-date monthly figures, Andrew.
Yes, but they should be more interested in the monthly figures, because the quarterly figures are backward looking. It's the monthly figures, and we'll look at the monthly figures versus the quarterly figures shortly. But it's the monthly figures that give us a real sense of how inflation is tracking. And certainly the international environment to this point is working in favour of lower inflation. We'll look at some of the contributing factors to lower inflation. But, we have the issues with tariffs on the horizon, which, according to most of the so-called experts, will mean higher prices and therefore higher inflation. The expert view on tariffs isn't really panning out, Michael, because it was supposed to create a crack in the US economy over April, but the US economy is continuing to go gangbusters. So there's a little bit of egg scraping off faces going on with some of the doom and gloom predictions in relation to the prospects for the economic prospects with tariffs, even though they really haven't begun. But we shouldn't be surprised at that. We're a hostage to the doom and gloom and clickbait from the media. And unfortunately, Joe Public and Joanne Public out there buy into that sooner rather than later. But I think that, the prospects for continuing lower inflation are very real, particularly given the collapse we've seen in the price of oil. And we'll look at that specifically
Let's talk about inflation, Andrew, because you said there was a lot of negative news in the media, and there definitely was, but there was also some positive news that inflation is now within the Reserve Bank's target range, which could give them the permission to lower interest rates at their meeting in May.
Well, that's right. It's not at the midpoint. When we look at underlying inflation, it was steady at 2.7%. So I guess, that's the midpoint, isn't it? But the Reserve Bank has been telling us that it needs to have that position or heading sustainably towards the midpoint. It certainly has moved sustainably towards the midpoint. I mean, what does sustainably mean, Michael? Is it going to last for a month or 6 months or a year? It's a sort of, an exercise in pedantics, I think. But certainly the monthly numbers now stuck, and it's underlying inflation, the trimmed mean that the Reserve Bank looks at, are now stuck at 2.7%. And when we look at the monthly data shortly, we'll see that the prospects are that will continue to fall, because the price of oil is now under $60 US a barrel, Michael, which is we've got a 50 in front of it, and that's been because of the the concerns over the US tariff policy. But
let's look at those monthly inflation figures then, Andrew, and what do you make of those?
Well, the monthly inflation figures, we saw that headline inflation was steady at 2.4%, and that's certainly well within the target range. But this is headline inflation, and this is monthly data, Michael. So as we've just already explained, the Reserve Bank focuses on the quarterly data. Underlying inflation was also steady at 2.7%. So these are good numbers, all within what the Reserve Bank has been saying is has as its target, well within the midpoint. The subsidy for electricity, which has been driving inflation down over the past year, wasn't as strong. Over March, it was down by 13.2%, the annual growth rate. Fell by 13.2% over February, but it was down to 9.6%. But that was offset by an improvement in fuel prices. They fell by 5.5% over the year, compared to a decline in the impact of electricity prices was offset by an improvement with fuel prices, and rents also improved from 5.5% annual increase over February to 2%, and underlying inflation is well and truly in the target range on a monthly basis. But of course, we need to look at the quarterly data set, and we've seen that the trend in underlying monthly inflation moving steadily into the target range. So maybe we can say that's sustainable, Michael. But we can also look at what's happened. Of course, we're looking at March data here. We can also look at at what's happened over the past month. We're out of April now, and we're still seeing falling international oil prices. So the prospects now for the April inflation rate are again positive, because we'll see another decline in the price of oil. In fact, over April, the international price of oil is now 25% lower than where it was over April last year, Michael. So you can bank in another positive result for inflation. That is, if we continue to get the same impact from the electricity subsidy, which of course will now start to decline. But of course, we've got our election behind us. I'm not sure we'll get another subsidy anytime soon, but we'll wait and see.
Okay. Each month we also discuss the rental market data that My Housing Market breaks down by state and by houses and by apartments. What's happening in our rental markets, Andrew?
Well, we've already discussed the April holiday month, Michael, which we do every year, and there's a lot of distractions that occur. We've had a particularly distractive, is that a word, month this April, because we had a later Easter, which backed straight onto the Anzac Day long weekend, which backed straight onto Election Day, National Election Day. So it has been one of those months where it's, you've probably forgotten what your boss looks like. But nonetheless, that's had an impact on the rental market because of less demand, of course, with those distractions to prospective tenants. So that means we've seen an across-the-board increase in vacancy rates. So still quite low vacancy rates, but certainly with less demand, as we would expect over April, that means there's been more properties vacant. But now, as I mentioned, we've got May approaching. Well, it's here now. And
Yes.
that will mean a more focused market with all those holidays behind us, with the exception of Labor Day in Queensland, which is being celebrated this week. But the numbers, as I said, the outstanding results were that we saw every capital city, with the exception of Canberra, with vacancy rates higher over the month. Canberra was steady. Vacancy rates for houses are still low. All capitals are below 1% and significantly below below 2% and significantly below 2%, with the exception of Canberra, which is still below 2%, but at 1.9%. Not a lot of movement in rents over the month, with the exception of Darwin, which fell 8.5%, but that is a volatile market both for rents and prices. Hobart was also down 1.5%, but the biggest mover was Adelaide, up just 0.6%. Most of the other capitals were either steady, with the exception of Sydney, up by just 0.3%. The leaders in house rents still remain Perth, Adelaide and Hobart over the past year, with Perth the leader, up by 6.9%, Michael. Similar results for units. Vacancy rates higher everywhere except Darwin, which was steady. Vacancy rates a little bit higher for units compared to houses. Melbourne vacancy rate and Canberra vacancy rates are above 2%, just above 2%, 2.4% at Canberra and 2.2% for Melbourne. We mentioned that 2% benchmark, Michael. Of course, that's typically where we see sort of the balance.
Yes.
Between higher rents and lower rents. Once we start moving above 2% consistently, we typically see lower rents, but below 2% consistently means typically higher rents. And we've seen that for a couple of years now, and that's why we've experienced those higher rents. But in terms of movements for rents, we saw Brisbane, that rental market in Brisbane for units keeps on keeping on, up by 2.8% over the month. Hobart up 3.1%. Sydney remains the most expensive place to rent a unit, as it is for a house, with median asking rents in Sydney at $750 a week for units. And similar to houses, the big rise over the past year in unit rents has been Adelaide, up by 8.2% of the major capitals, Perth up 8.3%, with Hobart up 11.1%, Michael. So a seasonal month, April, no surprises there. We move into a more, I guess, reliable environment for supply and demand in May. So it'll be interesting to see if we track back. But even though we did see an easing in vacancy rates over the month, it was really due to seasonal factors. Vacancy rates still remain quite low and certainly in favour of landlords. And most markets are a challenge continuing for tenants.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Andrew, each week we discuss the auction results because, as I keep saying, it gives us a good indication of how things are happening on the ground, how buyers and sellers are feeling. One thing I was a bit surprised with was how many vendors were brave enough to put their properties on the market for auction on Election Day.
Well, we had another distracted week, I guess, Michael, you'd say, with the National Election Day. But it was interesting that we saw markets, not surprisingly, of course, following the Anzac Day long weekend, strengthen in terms of auction numbers. The auction numbers were generally higher everywhere. Sydney had 552 auctions, up from 368. Another robust clearance rate for the Sydney market, 72.7%. The Sydney market's been tracking, higher this year than where it finished last year, and continuing to track at the same levels as a year ago, which was quite a strong period for that Sydney market. But Melbourne was the big surprise at the weekend, Michael, or over the past week. Auction numbers up, of course, as we would expect following the Anzac Day long weekend, but 775 auctions, but a 74.8% clearance rate, Michael, which is the highest Melbourne has recorded for quite some time. It's sort of been threatening the Melbourne market.
Hasn't it?
A little lower over the past few weeks, but 74.8% is really getting there. Now, we need to wait for a few more weeks, Michael, before we can call it. But I sort of double-checked most of the figures, of course, and it was even the regions were all, quite higher than where they've been. So it was a big weekend for buyers in Melbourne, Michael, despite being election day on Saturday. 74.8%. Brisbane clearance rate also up 45.4% versus 37.5%, which is a good result for Brisbane, which typically has lower clearance rates. And more auctions, a handful of auctions higher than the week before. Adelaide, it was down, which sort of broke the trend with the other capitals. Its clearance rate was 58.6% versus 71.2%. And conversely to Melbourne, Michael, Adelaide was actually one of the lowest clearance rates it's had for some time. Of course, that's been a boom market. And following on most of the other capitals, Canberra also had a higher clearance rate from higher auction numbers. So some good signs there, I guess, if you're a seller in terms of what's happening with auction markets, Michael. But a real standout, that Melbourne result, Michael, over 70%. So we need to wait with bated breath for this week's auction results out of Melbourne to see if what has been threatening an improvement in that Melbourne market is now quite clearly up and running. But we'll need a few more weeks to be able to call it at this stage. But yeah, generally higher auction numbers following that lengthy holiday break through April, and higher clearance rates, Michael, with the exception of Adelaide.
Well, as always, we're going to be back each week and we'll keep discussing the auction clearance rates, but what's happening in the market in general. And there are continual hints that Melbourne is finally starting to get its mojo back after a prolonged period of, very sluggish, languishing results. Thank you for your thoughts and your commentary, Andrew. Look forward to catching up with you again next week.
And just before you go, Michael, just on the Melbourne market, Melbourne is always the epicentre of first home buyer activity. So, if there is any bounce from the policies of the newly elected Labor government, that could add a bit more fuel to that Melbourne fire, which seems to be just burning a little brighter at the moment.
Well, let's watch this space. Thanks, Andrew.
Thanks, Michael.